Hi, I'm Chad Daniker, and this is Dave Manis, and we're here today to talk to you about real estate in downtown San Diego. Yesterday I wrote a blog about investing in condos downtown because there's three common questions that we get in this area. The first question, Dave, would you like to address the first question for us?
We've talked a lot about which is a better investment in downtown San Diego, one-bedroom or two-bedroom condos. We find in our business that a lot of our clientele are investors coming to San Diego, and they're looking for a return on investment as well as looking for appreciation in a property. So I think talking about one versus two-bedroom condos is a really important topic for us today, Chad.
I would agree, definitely. And it's really a question that we have with all of our clients. When we meet with people and we're out looking at properties and whatnot, the question comes up frequently, and it's a valid question. So yesterday we ran some models. We put together some spreadsheets and ran the numbers, and we found out, to our surprise, that one-bedroom and two-bedroom investments really penciled out almost identical with return on investment.
There was an equivalency we found between the additional cost of purchasing a two-bedroom versus the rent that you can receive on that two-bedroom condo. We in general have worked in a handful of buildings for investors, and so we did some comps between those two buildings and one-bedroom and two-bedroom condos.
Generally, the preface that we used for the comps that we chose were buildings that have lower HOAs but also offer amenities. We find that buildings that offer the amenities draw the renters, so you don't have any vacancies there, which we never want to pencil vacancies in. And then on our model, we did run 6% property management, and with 25% down on a 30-year mortgage at 5%, we ended up coming out with people's immediate return on that 25% they put down at about 1%. We were between 1% and 2%, which isn't super high, but what we really feel is that we're going to make your money up. You're going to get your return on your investment when you exit the market in San Diego.
That's interesting because there's two conversations with investors too. It's leveraging all that you can, creating the highest loan-to-value ratio that you possibly can, or those that come in and say, I would rather have my cash in real estate and are putting either buying it entirely for cash or putting down a greater down payment. In those cases, we're finding that people are getting literally a 5 to 6% return, whether they're buying a one-bedroom or a two-bedroom. So these are really interesting scenarios, things that you'll see both in the blog that you wrote yesterday and things that we talk about with these clients.
You know, and Dave's precisely right. We when you're leveraging somebody else's money out, that cost to borrow that money, that 5%, is eating into your return. But again, your risk, your exposure, is only the 25%. So you can do more with less. If you don't have the ability to come in and pay cash for a $200,000 condo or a $250,000 or a $300,000 condo, you can use somebody else's money to do it. Now your return is going to be a little bit less for the time being, but again, you're still leveraging somebody else's money. You're locking up that investment, and the market moving forward in San Diego looks promising. It looks really good. In terms of inventory in the market, what are you seeing right now, Dave?
Our inventory is really tight, and these investment properties are one of the places that it's tightest. I don't want to get too deeply into this, but this whole shadow inventory concept is one of the things that we're seeing that is really important to our investor clients right now, and it's inventory that right now we can identify as the short sale and foreclosure inventory, and it's dropped significantly from where we were just a year ago or even 6 months ago, Chad. This is really important to our investors because this is where the appreciation is going to come from, either because we're able to support them in buying something really right, or because there's a limited supply in the future and there's going to be more appreciation.
You know, and Dave said it dead on. There really is a limited supply moving forward. At this point in time, this morning, there was 304 condos on the resale market in downtown San Diego, and we're selling 93 condos a month on average. So we're down to about a 3-month inventory of condos here, and really a 6-month inventory is a balanced market. So, you know, theoretically, this would be a seller's market. Now, with these short sales and things taking a lot longer, you know, it's an interesting dynamic we've got here. But what we do see overall is we see good investment opportunities starting to become far and few between, because as the demand stays and the supply diminishes, there's only one thing prices can do, you know? Where do you see prices going?
Well, people have been asking me for a long time, you know, where is the bottom of the market? And my line has been, I don't think they're going to hang out a neon sign and say, you know, here's the bottom. I still haven't seen that sign. But Chad, the way that people are buying right now, I mean, you know, your inspiration for writing this blog, the prices at which people are buying right now, even if the market hasn't bottomed out, people are still buying at prices that seem to be 10 or 20% less than what we think the market's current value is. So, you know, right now, buyers are determining the bottom of the market, much more than I ever thought that they would.
I mean, I agree. I couldn't agree more. And, you know, the neon sign, I feel like I see the neon sign flashing on the wall. It's kind of interesting. I mean, my last experiences with writing my last 3 offers for my last 3 buyers were multiple offer situations. One of them, 11 buyers on one property on a 2-bedroom, 2-bath condo at Treo over at 1240 India Street in the Columbia District. And, you know, that 11 offers, 7 of which were cash. You know, I mean, that's a competitive market right there. A 1-bedroom over at Diamond Terrace, looking right into the baseball field at Petco Park. There was 5 offers on that. 3 of them were cash. You know, one of them I got my offer accepted from my client. The other one we still don't know. So it's, you know, it is a competitive market, but you know, it's a good market to be in. The prices are low, and that's why it's competitive. People are seeing the value of San Diego real estate.
I have just another comment, Chad, about the work that we do here every day in our business. We're downtown agents. We specialize in downtown condominiums. Every morning we have this conversation without a camera, and we talk about what we see in inventory, what we've seen or heard from other downtown agents. You and I have been responsible for something like 20 or 25% of these multiple offer scenarios. I mean, we're a very small office. There's just the 2 of us showing these properties to clients, and yet our clients are the people getting the opportunities and getting the properties purchased. I think that it's a great market for investors. I think that it's important to point out that 1-bedroom and 2-bedroom condos are great opportunities. And what I like best in having this conversation today is my perspective has changed, Chad. We sat here to talk about investors, but the fact is that anyone who is making a financial decision where to park some money right now should be looking at downtown San Diego. It's a really interesting perspective to come here with one idea and leave knowing that we've thought that through further, and that there's opportunities that I don't know where they're equaled in the financial market right now.
You know, I think Dave's dead on with what he's saying here. The reality is that we delivered so much inventory in San Diego during the peak years of the market, and a lot of those second home buyers, third home buyers, and speculators walked. So our market really did implode. I mean, our market, we're at 50% of what sales prices were before, and it's presenting some amazing opportunities, because the reality is with downtown San Diego condos, concrete, steel, and glass, you know, you're 500 to 550 a square foot to build for future developments. So anything new being built, you're going to be paying no less than $500 a square foot with a new developer. Well, we're buying things right now. I mean, we just had a sale at $190 a square foot on a concrete, steel, and glass building, and we're constantly seeing about $250, $275, $300 a square foot on the, you know, average buildings. We're not talking luxury condos here, but we're talking average buildings where your ROI is going to pencil out great, you know, and you're going to get some good return on your investment down the road.
We have these conversations quite often. Love the opportunity to share them with you on our blog. But also, we write about these topics several times a week on our blog at welcometosandiego.com. Please call us, please look at our blog, and we love sharing information about downtown San Diego and San Diego real estate with you.
Absolutely. For the blog on 2-bedroom condos versus 1-bedroom condos, and to actually see the numbers and how they work out on your return on investment, it's welcometosandiego.com/investing in condos. So welcometosandiego.com/investing in condos. It'll be right there. All the numbers will be there. We'll try to update them annually to keep those mortgage rates in line with what the market's doing. We appreciate your time today. Again, I'm Chad Daniker.
I'm Dave Manis. Thank you so much.
Welcome to San Diego.
Thanks.